Hello, everyone, and welcome to another Pro Charts episode. We're talking about stocks today. My name is Lawton Ho here with Verified Investing, your pro trader for this video. Today, we're not just going to talk about stocks, but we're particularly going to be talking about software stocks. And to say that software stocks have been down the drain is truly an understatement. So, let's start with the S&P. S&P having a pretty okay day today is just sitting here around flat. However, some of these software stocks that have been so beaten down are catching a nice bid. And let's start off with Robinhood, everybody's favorite brokerage, right? To starter brokerage is coming down decently and looks to be getting a bounce. But something I really want to kind of emphasize is the amount of bearish signals on this stock. We get a nice move down, bearish upsloping parallel channel, right? Another move down, same thing. This could be the start of a stair stepper pattern where you could see price go, let's do something like this, like this, like this, right? These kind of stair stepper pattern down. But you can see that it's created this nice parallel, upsloping parallel channel that is bearish. So how do you trade something like this? Well, you can trade on a break like you could have done here, or on a retrace. You see it come back, retrace, and then head lower, right? But just zooming out a little bit, the stock is significantly off of its highs. All the way back in just October of last year, not even that far away, it's down 54% from those levels, guys. Absolutely so beaten down. It does favor a bounce, but this continues to put in bearish patterns. So where do I see support for a software stock like this that continues to sink? Well, the first level I really would be potentially interested is right here around $50, right? There's a nice gap fill, but it's a huge psychological level. Now the price is at $70. That would be another 29% lower. So if you had to start a position maybe a little earlier, I would probably not even look at the stock until around $57.50. There's a nice gap fill there from also May. And if price comes down there, we could see a bounce, right? Just taking a look at its previous moves down, you see about a $15 drop from that break. So a $15 drop from this break would take it right in that sweet zone between that first aggressive entry around 57.50 and that $50 psychological level. Next one is Oracle, guys. Oracle has been so beaten down. I remember it was, one of the most valuable companies in the world. It almost hit $1 trillion, or it might have actually hit $1 trillion market cap. And look at it now, from those tippity top highs down over 56%, guys. 56%. This thing is so beaten up. And I have a couple key levels that I look at it for a potential bounce. The first level thing I'm watching is this nice downsloping trend line created here, almost creating an inverse head and shoulders. Well, literally creating an inverse head and shoulders. And let me show you exactly what I mean. What we can do is take shoulder there, put it at the high there. That's the left shoulder. Here's the head. And for this right shoulder, you can even put it down something like this. And now you've kind of formed this really nice inverse head and shoulders pattern. It's not the nicest one, right? But it's still valid here for this inverse head and shoulders pattern. And it could be actually looking to break to the upside. Delete this, and let's find that measured move. And for those of you who are not familiar with this pattern, the way you can kind of find that measured move is you take the top of the head to the neckline, right? And then you draw it to the breakout. So let's say it breaks out here, on the 22nd of April. You see a measured move up around 30%, basically to this pivot high here, all the way from the 13th of January, a good level. And so this is what I'm watching on Oracle. So it's something to keep in mind and you worry about. You can enter, just like I talked about with Hood for a short, you can enter on either a break to the upside or on a retrace back to that neckline. Now with head and shoulders patterns, I don't generally look for the full measured move, right? I'm not going to look for the full 30%. If I can get half of that, 15% of that or so, I'll consider that move already done. And then I'll either put in a trailing stop or just take my money right there. The next level for me I'm watching is APP. And if you take a look at APP and Oracle, you'll notice something quite interesting. The charts are nearly identical, right? Look extremely, extremely similar here, right? Because it's in the same industry. And in the same way that Oracle had that inverse head and shoulders inverse head and shoulders pattern, right? So does APP AppLovin. Just scrolling out a little bit, AppLovin from its recent highs back here in 29th of September, down about 43.7%. So almost 47% down there. Definitely favors a move higher, but the question is where. And for me, it is at this neckline, guys. Let's say it breaks here on the 30th of April. We can use the 22nd of April, just like we did for the other one. That measured move would be a move up 43%, getting close to what? The same pivot high, right? Same sort of pivot high from when? The 13th of January. And you guys see how this kind of lines up almost perfectly. Really, really well here. And just like with AppLovin, just like with Oracle rather, you can enter in either a break of this downsloping trend line, this neckline, or on a retrace back to the neckline. Retrace back to the neckline. And the last stock I want to talk about is Reddit, another kind of software company, and for this stock, right, is so beaten down. I remember when this IPO'd back in 2024, right? It popped up, came back down, and it had a tremendous run. Not without pullbacks, especially around Liberation Day last year. But from its highs in September, you're going to notice all these stocks, all these software companies peaked in September of last year, down about 50%, 48.6% from those levels. Now we can try and say, oh, is there inverse head and shoulders? Not quite, right? Not quite an inverse head and shoulders pattern. So we don't have it that easy. However, there are a couple trend lines that we could draw, namely, this one, very clear trend line that favors a move up if we can get a break, right? If we can get a break there, or, right, we can potentially see the formation of an inverse head and shoulders pattern. We use this as the neckline, right? Of course, the right shoulder hasn't been formed yet. However, let's say, you draw a shoulder there, head there, and maybe a shoulder like this. Well, now you're we connect this. Now you're in business, right? There's your inverse head and shoulders. It wasn't so obvious, but that's because the formation hasn't clearly played out yet. Now, for this measured move, as Drew would say it, this measured move would be a move up about 24%. So not quite as large as some of the other ones, not the 30%, 40% we saw in Oracle and AppLovin respectively. However, still potentially favors a move higher, right? And just like with those, you could enter on a break of this downsloping trend line of that neckline, or on a retrace back to this neckline, right? And let's say if it just goes lower, you have a couple decent levels of support. If Reddit just continues to sell, you have the previous pivot low here, just under 120, right? And then the Liberation Day lows, basically a year ago, just over a year ago, from that $80 level will be a key level of support. Honestly, it'll be extremely surprising if Reddit can come down and recapture that $80 level. But for now, these are my levels. All right. With that being said, guys, I'm going to close it here. My name, again, is Lawton Ho here with Verified Investing. I hope you guys have a great and wonderful rest of your day, and be careful out there trading these software stocks. Have a great day, and I'll see you in the next one. Bye, guys.